Hello YouTube, what is up? My name is Reese, and today I will be starting a new video series that I will be calling Intro to Technical Analysis. And essentially, what these videos are going to be about is getting into some more technical side of things, of learning how to understand charts, candlestick patterns, and try to understand patterns and get a better understanding of what technical analysis is, so that you can use it for yourself to potentially help you make a better trader, as well as just get a better understanding of what's going on in the market and how things are moving. So to start things off, I'll be starting from the ground up. In this video, I will be talking about candlesticks and how to read a candlestick and understand what it's trying to tell you. And I believe you really have to understand what a candlestick is in order to understand the more in-depth technical analysis tools. And so to start off, here is a diagram of a green or red candle. And essentially, I will be getting into some specific examples of candlesticks as well. But to start off, these are the breakdowns of a candle. So essentially, I'm going to start with the bearish candle. And what a bearish candle means is essentially that the price is moving lower in that given time frame. And so you have the body, which is going to be represented by the filled rectangle, and then you have the wicks, which you're going to have above and below. And the wicks are meant to represent the bottom and the highest price and the lowest price that a stock or index moved within a given time frame. Open is what the price started at, and close is what it ended at. So in this given example, the price started at the open. Maybe it went up briefly to a high of this, but it ended lower. Maybe it reached the bottom of a low here and then moved up to the close. So what is this meaning is the wicks are representing the range, and then the body is representing that it opened higher than it closed at. Similar on a bullish candle, similar concept, but instead of the close being lower than the open, it is higher, representing bullish, meaning green, it's moving higher. So similar concept, you have this wicks higher and lower than the body. And so this is just, seeing this alone isn't the most helpful. It's kind of just important to know that this is the body, the rectangle is the body, and then the wicks are the ranges of a given price in that time frame. So what does that mean? So here is SPY, which is an S&P 500 ETF, and we're going to be looking at the price action that happened today. So what do candlesticks tell us? Well, candlesticks tell us how much a stock is moving within a given time frame. Now you can use this for forex, cryptocurrencies, anything that's trading with price action. You should be able to get a candlestick pattern to show you how prices are moving. And this is the 1 minute time frame. And I'll get into how different time frames will affect the candlesticks, but on a 1 minute time chart, each candlestick represents 1 minute of price action. And where price is moving a lot, such as pre-market today at 7:30, there was bad inflation data that was released, higher inflation than expected, which caused the market to sell off immensely represented by a huge candlestick where it dropped. The SPY dropped $9 in 1 minute. So that's pretty big movement, considering that candlestick alone was bigger than any other candlestick for the rest of the day. So we're going to zoom in, and we're going to go through a few candlesticks. So here, we're going to start here. So this transition between the colors represents that we went from pre-market to open market at 8:30 a.m. And in case you don't know, this software that I'm using is TradingView, and how I have it set up right now is just to show regular candles on a 1 minute time frame using SPY. I don't have anything else overlaid or indicators wise for this particular graph. TradingView is a free software that you can download and use to help you better understand and play around with graphing tools to help you just get a better feel for different indicators, how everything works and looks. And I personally really like it. I don't use it to trade. I use TD Ameritrade Thinkorswim when I'm making trades, but I think TradingView is a nice tool that you can use, and it's easy, and you can put it on your iPhone or whatever device you have as well. So here's our candlesticks, and we're going to be going through a few candlesticks. So you will notice that on each candlestick, some bodies are larger than others. Now what that means is the larger the body, the bigger difference there was between an open and close. So we're going to start from the very beginning at 8:30. So 8:30, this first candlestick pattern. The stock opened at 349.23, represented by the top of the body. And we know this is a red candlestick, and the price would move down in that price range. I don't want it to. There we go. Okay. That's better. So at 349, that's where the stock opened at. The stock in that time period reached a high of 349.41, pulled back, and made a bottom of 348.52, and then recovered those gains, or recovered those losses, and ended up at 349.18. So what that means, this represented a huge wick in a small body. So that means is from open to close, within that 1 minute period, the stock didn't move much. And from open to close in terms of price range. But in between that minute, it moved a lot. So moving on to the next candle, we opened up at 349.20. Stock moved up just a little bit, sold off to 348.50, recovered some losses, ended up at 349. And basically, moving on to this green candle now, the stock, because it's a green candle, the open is lower than the close, meaning it starts at a lower value than it ended up. That's why it's a green candle. So we started at 348.25. It sold off a little bit within that minute to a low of 348.10, and it closed at the high. There's no wick over the body. So that means that when the minute ended, it was ending at the highest point it had been in that minute. Moving on to the next candle, similar thing. We opened up at a lower value relative to the ending value. So that means it is a green candle. I'm going to mute Discord because that's kind of annoying. So similar thing, sold off a little bit. Buyer momentum kicked in, candlestick moved up, and it ended at a high because there's no wick. Now we're going to look into a larger time frame, 5 minutes. So what this means now is each candlestick represents 5 of these 1 minute candlesticks. So you see that suddenly, so you see it looks pretty choppy. And now we move to 5 minutes. And while it's still choppier, it's a little bit smoother on the way up. Versus when you're seeing each individual minute, you're seeing a lot of these little bounces on the way up. Move to 5 minutes. It looks much more smooth. Now, with that being said, the price ranges are still the same. You know, we're still seeing a low of around 349.09 and then a high of 349.85. Go to the 1 minute. And that's true. The low was 348.09 and then the high was 349.87. So you're still seeing the same ranges, it just in a different time frame. So the larger time frame we go, the less candles there will be in a given day, and it'll drastically change your view of how the market's moving. So when I'm day trading, I use the 1 minute candlestick personally, because that way I can see what's going on during the day live as it happens, so I can try to, when I was day trading, that way I could scout. I like to scalp trade on day trading, just quick in and out. And the 1 minute chart that was updated continuously really helped me personally. Now, if you're going to get more into swing trading or long-term trading, you want to zoom out a bit. So now when we get on this 4-hour chart, okay, I'm going to change stocks to the S&P 500, not an ETF. When we trade to the 4-hour, suddenly we're going to these huge, instead of looking at an intraday, meaning a 1 day, we're looking at, or instead of looking at a singular day, suddenly we're looking at a time period spanning months. So with 4 hours, we can really zoom out and see how prices have moved from months ago relative to now. And because when we're looking in these short time frames, 5 minutes, yeah, the S&P 500 is moving down, but it's harder to get, when you're focused on just a few days of data, it's really hard to tell what direction the market's moving. So when we zoom out to a higher time frame, such as 4 hours or 1 day, we can get the big picture of knowing, all right, so this is how the market's moving. And as of right now, we are currently in a bear market, designated by the candles are trending lower. And I will be getting into moving averages and exponential moving averages and other tools that you can use to kind of get a feel for what the price action is telling you. And that pretty much sums up what a candlestick is. What it's, in short, it's showing the price movement of a security within a given time frame. So with 1 day, this is how much the price is moving in 1 day. Each candlestick is 1 day. And you can go even up higher. You can do a month. Suddenly that really changes how things look. You know, this is since 1991. You can really fit in a lot more data when you increase the time frame. So as you can see, based on what these candlesticks are telling us right now, is that we had a pretty nice rally after the COVID sell-off, and then now we are seeing what some are calling a correction, some calling a fear sell-off, whatever you want to call it. The facts are that we are in a bear market and we are selling off. And so zooming out, learning to understand what these candlesticks are trying to tell you can really help make yourself a better, well-equipped trader. So I hope you guys found this helpful. In my next video, I'm probably going to be looking into moving averages and how that can help you tell what direction the market is moving. So hope you guys found this useful. Thank you guys for watching. You guys have any content suggestions or recommendations for me to look into, feel free to comment below. I'd be more than happy to take a look. Thank you guys for watching. If you enjoyed this, feel free to leave a like and subscribe. Thank you. Have a great one, guys.